Hey everybody, I'm Peter Cunha with the Peter Cunha Real Estate Team. Today we're diving into a topic that's emotional, complicated, and let's be honest, overwhelming. We're going to be talking about divorce and the mortgage. And I'm here with not only, I'd like to start with a dear friend, somebody that I've known for a better part of a decade at this point, but she's also a certified divorce lending professional, and she's an expert when it comes to divorce mortgage planning. Stacey, thank you so much for doing this with me today.
Thank you, Peter. I'm really excited to be here and help people understand the financial side of divorce, especially when it comes to real estate and mortgages, which are, the house is usually the biggest asset, and how it gets split up and how people can move forward is an important topic to talk about.
All right, so let's get right into it. This is probably the number one thing that I get asked a lot of times when people are going through a divorce situation or even just a separation. Can one spouse afford to keep the home?
Well, that's a great question. It's not a simple answer. A lot of it depends on what the financial situation is overall. What I do is I help with all things home related and analyzing whether someone can qualify for a mortgage payment or not. We look at income, we look at credit, we look at spousal support, we look at assets, and what someone can afford to qualify for is a very complicated equation that takes all of these things into consideration.
Yeah, and the one thing that I get a lot of times too is, especially when we're talking about the non-money making spouse, kind of the house caretaker, etc. Can they use spousal support as a qualifying income, for a new mortgage? Because they have to find another place to live. Does that qualify?
Yeah. So technically, yes. The thing is that when a divorce is present in a mortgage transaction, the guidelines change. So there are specific requirements for alimony and child support, such as you have to have a 6-month history of it and a 3-year continuance in order for it to be defined as qualified income to the underwriter. And if the settlement agreement is not written with those terms into consideration, then alimony and child support will not be able to be used. So one of the things I do is I work with the divorce team to help make sure that the language in the settlement agreement, specifically regarding income and assets and liabilities, all complies with mortgage guidelines, so that if it's possible, someone can qualify for a mortgage after divorce.
Okay, and just to go into a little bit more detail, we're both part of a group called the National Association of Divorce Professionals. How can who should they talk to make sure that they have this in the verbiage of, the divorce settlement, let's say, so they can qualify in the future? I have my thoughts, but do they go to a mediator, their divorce attorney?
So if someone has a divorce team, it's usually a mediator or an attorney, a financial planner, possibly myself as a certified divorce lending professional, and we work together, based on each individual situation, and figure out what's going to ensure a successful settlement agreement after the divorce.
All right, and then here's one thing that a lot of people come across, right? It's they're going through the divorce process. They know that they're no longer going to be living in the house. For whatever reason, they forfeit the house, or they agree to a set amount, right? Removing them from can someone get their spouse removed from the quitclaim deed, and kind of just because they're removed, or they're kind of like, hey, listen, I don't owe anything more on this house, I'm out?
Yeah, so with where interest rates are today compared to where they were a few years ago, a lot of people asked me, can't I just remove my spouse from the mortgage? The answer is maybe. Certain loans are assumable, meaning that if they qualify to take over the mortgage, that's a possibility, and that will remove the vacating spouse. Most mortgage companies have an assumption department where even though the loan paperwork at closing says it's not assumable, they might be able to work with you on some sort of assumption. But you can't just call your mortgage company and have your ex-spouse removed. That's not possible. You either have to qualify for an assumption or do a full refinance to remove them.
Okay. Yeah, no, it's one of those, there's so much technical stuff, and this is why I know somebody that's currently going through a divorce, and I feel like they got the short end of the stick, so a hard topic to be like, hey, I know I'm your realtor, I know I'm your lender, why would I ever talk to you guys when I'm going through a divorce? I don't think people realize that there's experts kind of in their field, in their lane, that can help them with a lot of things.
And people also ask me, well, what if I just quit claim my spouse off? Well, that's not going to release them from the liability of the mortgage. That might get them off title, but their credit is still exposed by staying on the mortgage, and that could create problems down the road.
Yeah, and that's gonna, all right, so we're going from all right, we're going through a divorce, we want to settle stuff, but at the same time we want to move forward with our life. Here's the big question: when is the right time to start a divorce mortgage planning to move on with their life, essentially? As
early as possible. Like as soon as someone's thinking about divorce, if you want to keep the house or if you want to buy a house afterwards, talk to me. I do a full analysis to help figure and provide options based on your scenario to see what you'll qualify for. So you have that knowledge going into mediation or going into litigation, and you know what you need to accomplish your goals. You've got to have a plan when you're going into divorce. It's a lot like a business transaction. It is a business transaction because only it's very emotional. But you've got to have a plan, and knowing if you can qualify for that plan, if it includes keeping the house, the earlier you know that, the better.
Right. So this is I love that we're talking about this because it's uncomfortable for a lot of people, right? I've gone through so many scenarios where people are like, just tell me what my house is worth. And I'm like, I can't, with a conscious mind, tell you an exact number. Because they're like, oh, just tell me what the number is, we'll split it in half, and I'll pay somebody off. So, all right, we've kind of gotten to the part where we are going to go through the divorce. We know how to get ourselves off the mortgage, etc. What about the starting over portion? For someone who wants to buy something now post-divorce, what should they know? Just kind of on a high level, I guess.
Again, they should have an idea of their income, their assets, their liabilities, their credit, all of that, and have a budget. Whether if you're the vacating spouse, if you're paying alimony or child support, that's going to come into the equation as income reduction, basically. So it's important to protect yourself. Or if you're selling the house and starting over again, you want to have a fresh start in a new place, and you want to know what to expect, and you want to make sure that if you need certain debts to be assigned to the other spouse, or figure out what your scenario is. And we have a lot of creative ways to help with qualifying income and doing the best that we can to make sure that you will qualify for what your goal is at the end. It's a lot harder if the divorce is over and then someone comes to me and says, hey, I just got divorced, I want to buy a new house, here's my settlement agreement. Then my hands are tied sometimes based on what's on that settlement agreement.
Right.
by talking to me early, we can be like, okay, this is what you're going to need in order to be able to purchase a house, and you can negotiate that to an extent.
Okay. Yeah, and it's difficult because a lot of times people, like you said, if they come to me after everything's done, typically what I'll ask for is, hey, we got to get you pre-approved for a mortgage, and I know it's so much different, and there's a lot that you can add value to than just a regular pre-approval on a mortgage. So, again, reach out to Stacey. These are really kind of complex topics. You need a team. What's the joke that we always talk about? When you get married, you hire all these people, the flower person, the caterer, the venue, right? It's like when you get a divorce, you just sign on with one person, and you hope that they have a team surrounding them where we're all kind of familiar with this process. So here's another topic that I thought of, that I thought was kind of interesting, and it's the co-owning the home temporarily. When you and I were discussing this, I've never heard this, but it's called bird nesting, or just
Yep.
style.
Yeah, so again, with interest rates where they are, many divorcing couples are deciding that the vacating spouse is going to stay on the property and stay on the mortgage until rates come down, or until the children graduate high school, for whatever reason. It's called bird nesting, and that vacating spouse needs to vacate and possibly and buy a house, or do something. And the concern is, if they're tied to the marital residence, how are they going to afford to purchase a new house? There are strategies to structure a loan and get someone qualified while maintaining that and having that obligation on the other home. But it needs to be crystal clear and part of the settlement agreement. Who pays for what? How repairs are handled? What happens if one person wants out sooner? And again, if both names are on that mortgage, both people have their credit scores at risk. Because if one spouse stops paying the mortgage, then that's going to eliminate options for both of them. So it's got to be something that's got to be worked through with the attorneys and hammered out down to the very last detail.
Yeah, I couldn't agree with you more. It's incredibly difficult going through this process. I don't wish this on anybody, but in my world, it's always like you're ending a bad chapter and you're starting a new one, hopefully. I can't say that for everybody, but it's it's a very kind of Pollyanna of me, but I've never myself been divorced, but I know plenty of people that have. I see them finding a second spouse, or somebody that's more in line, and they're happier and they can't believe that they didn't do this sooner. So it's not a death sentence by any means. So Stacey, this has been incredibly insightful. So just thank you for sharing and breaking this down into a way that people can really understand. If you're going through a divorce, or even thinking about it, don't leave your mortgage or real estate plans up to a chance. I always say this: your realtor does matter, your lender does matter. I can't tell you how many times I get a call for a second opinion because they felt they went in the wrong direction, or they're not happy with their lender. Listen, we do this for a reason. We're here to protect you. So, Stacey, again, thank you. How can people contact you if they have questions? That's always, we'll put your phone number and email down in the notes, but.
Perfect. Yep, reach out. You can, I'm with United Teletech Financial Credit Union, and do the divorce mortgage planning. So you can reach me at 732-673-0297.
All right, guys. And if you haven't subscribed already, please do. You'll get more fascinating topics like this. God knows it's difficult out there. I know people are uncertain, and hopefully we have better times ahead. And we have Stacey and myself helping you out and guiding you, throughout the process. Thanks again, Stacey. Have a great day.
Thank you, Peter. Divorce is hard, but it doesn't have to be financially devastating if you plan ahead, and that's what I'm here to help you do.
God bless to that one. Thanks, Stacey.
All right, thanks, Peter.